Hello everyone, welcome back to CryptoCache. Thank you so much for joining me here. Hope you're having an amazing day with you and your family. We're taking a look here, of course, at our best friend Bitcoin, seeing what's going on, of course, and helping understand best practice, big picture. If you're new to the channel, I am not a financial advisor. I hope you can learn something here today. What we're going to do, though, is take a look, of course, at some specific details, more so relative strength index and larger time frames, as well as some micro time frames, too, to kind of identify a few factors and patterns, kind of help us understand roughly where we're at in this process. There's a great chance we're getting close to the bottom, so there is consolation there. But for the most part, it's best to be careful and cautious with long positions, just based on the fact that they're all getting pretty well wrecked right now, okay? That being said, CryptoCache.tech is a site, link in the description below if you want to become a better trader. I've got a trading academy, teach you how to trade. I've got a signal group where I send out signals for every single trade that I take. We took a lot of good, strong short positions recently, but most of those have closed because we've fulfilled all of our profit targets. Therefore, we're in a position right now where we want to maybe consider a long trade. And I'll explain what I mean by that too, because you should not just carefully or cautiously, no, let me explain that, actually. Backtrack. I want you to cautiously jump into a trade, but don't actually jump into a trade. Does that make sense? All right, I'll explain more. So what I'm getting at here is that with Bitcoin, where we're at right now is a unique situation. All right, very unique in the sense of the fact that we haven't seen this type of sell-off, at least this low of a price point, in quite some time. Now, to touch on some key level supports, just so you know, right here at about 19,800, round number 20,000, that's where we had our all-time high peak from roughly 4 years ago. Okay, so if we look back here, right back in 2017, December 2017, that's about 4.5 years ago, we had our all-time high, and of course it tapered off from there quite significantly. Lowest point in which was back here in the December of 2018 timeframe, roughly 4 years ago, or 3.5. That being said, we're expecting the price action to respond similar to this, where we're at presently. Okay, so we take this little guy and we move him on over. That's basically what we're expecting to happen here. Now it looks a lot different, and the price is exaggerated, and of course it looks, well, it's just different because it's magnified. Of course, we have new current times to look at, and there's a lot more going on in the world than there was back then. Handful of different reasons, but a lot of the moving averages are holding as supports, and I'll explain here in a moment what I mean by that. And ultimately, we're looking, par for the course. It's pretty standard behavior right now for Bitcoin. All right, so let's go ahead and start with the monthly and work our way down so I can kind of explain what I mean by that. So if we take a look at the monthly here, of course, we can see the 50-day SMA was tested. I've been talking about this for quite some time, that will be a likely bottom for Bitcoin based on the simple sentiment that the 50-day SMA has been one of those SMAs that the price has only ever wicked down below one time, and that was back during COVID. Even prior to that, in our worst case scenario, basically when the price capitulated way far. It was like a 40% correction right here, this little candle. That time frame right there, the price didn't even touch the 50-day SMA, okay? But it did touch here during COVID. All right, so I'll give you perspective here. We've got some crazy stuff going on in the world, inflation, etc. All that COVID stuff coming to a head now because of the fact that we're paying our dues, so to speak, with the inflation. It's all coming to a head, and we're seeing that happen here. That being said, there's a strong chance this is a likely bottom for Bitcoin, or at least we're in a very close range for the likely bottom because of, once again, the all-time high working as a strong support level now as a low. And then, of course, we also have the moving average kind of averaging itself out right there. That's a great sign. But bottom line here is that we're about 2.5, 3 months into a 6-month reversal. In other words, it'll take roughly 6 months for the price to recover back up above the 20-day SMA. That's how it's worked previously. And if it were to continue that same type of situation, we should expect 1 or 2 more months of choppy behavior, basically range bound between 20,000, maybe 24,000. And then, of course, a potential break to the upside from there. That's roughly what we're looking for and expecting. Again, a lot of this has to do with the climate in the market. Of course, the traditional markets are struggling, as well as the fact that there's a lot of craziness going on in the world today. Okay, so again, fundamental catalyst pushed the price action down here recently. In a lot of ways, that had a lot to do with the increase in inflation, and we're going to probably see that come to a head here soon. Today and tomorrow is the Fed meeting, so pay attention to that. We do technically see a lot of volatility during that time frame, so just be mindful that could shift things in different directions today. A lot of times it's best to kind of take stand on the sidelines and wait for the price action to recover. Probably best that we just kind of be patient at this point. That's what we are doing as a community right now, and it's paid off in a lot of ways by not FOMOing in. Now that we're kind of hitting our bottom here, and we'll kind of take a look at that, it's a strong likelihood we're going to see the price action recover slightly. Okay. All right, let's take a look at this here. This is the weekly. This is something also I want to make sure to mention. We can see the 200-day SMA working its way over, roughly as a support right now at about 22,400. So if we can close above that in this week, that'd be a very good sign. Okay. So ultimately, that's what we're looking for as a closure for this week, about 22,400 or higher. So we're looking pretty good in that sense. We're kind of on track for that. It's very early to tell. Really doesn't apply to the moment, but generally speaking, we can expect that to be a level in which, once again, we shouldn't see much lower. Obviously, we went as low as roughly, 20,800, if I'm not mistaken. So generally speaking, we're not in great shape, but we're also doing okay in the sense that it doesn't feel like we're going to see a tremendously lower price point. Okay, and those are good signs. Those are good things we want to pay attention to. Taking a look at the RSI, this is something I also want to point out. We're actually officially below, once again, this weekly candlestick hasn't closed yet, but we were officially below 30 on the RSI. The last time that happened on the RSI was back here in December 2018, as I've mentioned before previously, when the price came all the way as low as the 50-day SMA on the monthly. Okay, so again, we should be at a point in which the price action should perform similar to what we see here, whereas over the next few weeks we'll see a slow increase in price and then an inevitable breakout to the upside. Okay, so I do think we are about a month or two away from that. I would not expect or anticipate the price action to shoot up from here. I mean, you would like to think that that would be the case, but there's so much selling pressure still that it's not going to happen until we get an average price out, right? Until the price average itself out. So that's kind of what we're looking at there for the weekly. All right, let's go ahead and move on to the daily, kind of see what's going on here. And with the daily, what we can see, of course, is that we're obviously down in the lower tiers here of Fibonacci retracement, but more importantly, we're in between two key level resistances and supports. What I mean by that is 20,000, once again, the previous all-time high. And again, I'm just summarizing by saying 20,000, it's 19,800, but 20,000 essentially is the lowest point we should expect the price to see in the immediate future. Again, pending no crazy nonsensical stuff in the world, we should be good to hold that level. 24,000 is also a resistance level. That was another previous support level, basically reaffirming itself as a resistance now. Now, it hasn't been tested yet, but 24,000 is pretty darn close to the approximate number there that we should expect to see resistance. Okay. That being said, we can see here on Fibonacci, 23,000 is also a potential resistance level. Okay. So again, we're going to kind of take a closer look at smaller time frames to identify, but generally speaking, that's where we're at here right now. We're also under 70 on the RSI on the daily. Big surprise, last time we came down that low was in January on the 21st when we had our first lowest point down to 33,000. So again, a lot of a lot of unfortunate things, I guess you could say, that are adding up together, but more importantly, it's reaching a bottom. We're reaching a conclusion here, and I don't think there's an extreme likelihood of seeing a price point lower than 20,000. Again, stranger things have happened, but I think we should expect that to be a relative bottom. So a good stop loss for you, if you were to have one, would be just under that, maybe say 19,500. All right, so again, different schools of thought there, but that's generally what we're looking at. Taking a look at the 4-hour here. Let's see, we're underneath all moving averages. Big surprise, that's pretty much par for the course on all time frames, at least the daily and the 4-hour. If we look at the RSI, we're extremely overextended as well, but we're making our way back up. Now, the thing to keep in mind is sometimes 30 on the RSI can work as a resistance level once you've been below for some time. We've been underneath that for about 2 days straight now. So, that being said, if we get a break above 30 on the RSI on the 4-hour, that'd be very, very helpful. That would help us understand that we're on the right side of the tracks, and we could actually see a price point of 23,000 or higher. For right now, we don't want to count on that, of course, but we can see that there is a potential MACD convergence occurring here, as well as the fact that the actual bearish momentum has slowed down significantly. Again, we're getting closer to the bottom. Another thing you can see as well is with the increase in volume, that does help us understand that we're hitting that floor. Okay. Now, it's not a guarantee, but oftentimes you'll see an increase in volume at specific price points, telling us that the bulls and the bears are effectively, canceling each other out. That's kind of what we're seeing right now. The price action has gone sideways for the most part in this range between 22 and 22,500. And that increased amount of volume helps us understand, even especially overnight volume too. Keep in mind, this was when the traditional trading hours were closed. We're still seeing higher volume. So those are very, very good signs here. Ultimately, we want to be able to take a look at this and help understand that, that's reaffirming the fact that we shouldn't see a price point much lower. If we do see a price point lower, it'll probably be a slow bleed sideways and then down. I don't think we're going to see that though. I do feel as if 20,000 should be the immediate bottom. All right. So again, that's just kind of where we're at there. We're extremely overextended. Also note on TD sequential, we were extreme overtime here recently. We're finally getting a reset at a 1 here. Really just telling us that doesn't mean we're going to see 8 more 4-hour candlesticks to the upside. It just implies that we're done slowing, we're done bleeding out, so to speak. Okay. So again, I think the worst is behind us tentatively because we need time to average it out. Ideally, we average sideways for a couple of weeks and then increase, but we could very well see something similar to back here where we saw the price action go sideways and inevitably come down. We could see that as well. But it's not going to happen right away. You just got to keep in mind the likelihood of the price shooting down lower from here is pretty low minus a fundamental catalyst. Okay? And those are things we don't have control over. We don't know what that's going to be. So anyways, looking at the 1 hour, let's go ahead and just kind of summarize here. If you have a short position, you want to close it because the lagging span is intersecting with the price action and or soon to. Very, very close there. So that basically just means if you're shorting, you want to be cautious and careful here and to not necessarily saying you want to close your position, but you would want to have taken some profit, at least 60% or greater, to ensure that you are profitable even if the price were to reverse. But I don't think there's a super strong likelihood of the price coming down from here. But we got to keep in mind too, though, again, this is tentative for the moment. This is an hourly time frame, but we are tentatively making lower highs and higher lows. Okay, what that usually just means is that we get some type of a wedge, and the breakout potential is greater to the upside just based on the overall sentiment and the way things are. But traditionally speaking, when the price comes down like this and you have like a pennant pattern, it will usually break to the downside. So be mindful. We could very well see a price action lower from here. Once again, not dramatically lower, but I would say 20,000 is still realistic to be able to hit and test that level in the near future. So again, just some things to think about, but the cloud is basically telling us that your short position should be closed here soon, just based on the fact that we are starting to average ourselves out higher with higher lows, and that's a great sign so far. The key here would be to break 23,000. It looks like it did try that overnight last night at roughly 10 p.m., but it was unsuccessful, and then of course came back down and made a lower high. A higher low, which is fantastic actually. I would much rather celebrate a higher low than a lower high. And this lower high hasn't even come to fruition yet. We got to give it some time. So in truth, there's a stronger likelihood of the price coming up than down from here. How far up? Probably not that far. 23 or 24,000 I think would be the shelf. If you're going to set profit targets, 22,900 and or 23,900, just below those key level resistances to ensure you get filled if the price comes up and gets rejected and comes back down. All right. Again, those are things that I apply in all of my trades. So when I send out a signal, you'll see that there's a lot of familiarity there in that sense, whereas I have usually 5 profit targets, and I have, of course, a trailing stop loss that adjusts when we hit our profit targets to ensure we take as much profit as possible. All right, and I usually do about 60% on the first entry, so that way once, if it were to reverse back around, come back to break even, you're still above and ahead. All right, again, the point right now of trading is to survive. It's not to necessarily thrive. Obviously, if you did a bunch of shorts and you had a really good experience there, that's perfectly fine. We did that too, but we're not using super large position sizes, and I recommend not doing that for a while until we have confirmation we're on the right side of the tracks. It's just the bottom line. So please, please, please do yourself a significant favor and not go too crazy right now, and just try not to buy the dip, even though it does feel like we're at the lowest point. Don't go too crazy bonkers. It's okay to have a lot of trades, but it's not okay to have large position sizes. That's just my personal opinion, okay? So please understand that. Anyways, those are just little things that I like to recommend. Overall, we're looking pretty good here for Bitcoin. I would say, generally speaking, we're not in dire straits whatsoever. Definitely in pretty good shape in the sense of not experiencing much lower price action. If we were to, 20,000 should be the absolute bottom. Immediate future, 20,800, or just say 21,000. So 20 and 21,000 are two key level areas, basically a nice support zone we should anticipate being a very good place in which the price action shouldn't go much lower. Okay. All right, again, that's kind of where we're at here for the moment. So thanks again for watching. Hopefully you learned something here today. If so, comment below. Thanks again for all of your support. And to my current community members, my 200 plus members, thank you so much for just allowing me to help you and to get you in a good position there. It's so rewarding to be able to get that positive feedback from my members. So thanks again for that. I greatly appreciate you. I look forward to getting to know you better. If you're not currently a community member, CryptoCache.tech is a site, link in the description below. We'll see you in the next one. Have a great rest of your day.